the economy is going to completely fall off the rails after Wednesday.
So the stock market's officially correcting right now, down more than 10%. Everybody's freaking out. There's extreme fear out there right now. Tariffs, recession, potentially inflation coming back and going way higher than what we had before. So everybody wants to know, do we buy the dip or is the market going to keep going down lower and we're just going to catch that falling knife? But after watching this interview that I'm going to play for you in just a second, it changed a couple things. So let's break down the interview with Tom Lee. I'm going to play it for you right now. And then as always, I'm going to give you my no BS, no fluff, no clickbait breakdown of what's really going on in the market because I have no agenda. I don't care about views. I care about making money. That's what you guys are here for. We're all here to make money. So let's roll the interview with Tom. I'll break it down for you guys. I'll show you what I'm doing my $1 million account. Here we go.
Some of the underpinnings are in for a real bottom, for a tradable bottom or a real bottom?
Yeah, I mean, both. I mean, if obviously it doesn't feel this way because over the weekend futures came under pressure, but we know markets are really oversold. We know that investors have had a lot of de-risking. And this week, I think into April 2nd, investors have three things on their minds. One is they just don't know what the tariffs look like. They don't know if it's going to damage the economy. And I think third, many are just a little terrified of the policies of the White House. But post-Wednesday, I think markets are going to have some visibility, and that allows us to take some of the selling pressure off. So, yes, I think it's possible that instead of us breaking down here and seeing markets under further pressure, we're actually got the right pieces
buy, though, into this without knowing what's on the other side of it? That is the fundamental question that people are sitting around trying to figure out today and tomorrow.
That's right. It's an interminable wait for people because it is still 3 days and they're fearful that we could have 3 days of down 2%. But I kind of agree with Larry Fink. I think the U.S. is going to come out of this okay. I mean, for investors today, over the weekend, we had so many thinking the economy is going to completely fall off the rails after Wednesday.
People are starting to say slowing growth and persistent inflation. So you put those together and you get the stagflation. Yeah, that's death for.
Yeah, I mean, there's a lot of distortions of the economy now, right? Because we know people are buying cars and wine ahead of tariffs, and that's creating inflation.
Hopefully, they're not doing it the same. The cars and the wine.
Do you think it's pushing up our growth numbers that we're seeing at this point, between retail sales and other places, or is it too small to distort things on that great of a level?
I think it's possible economists are only dialing in the negative consequences so far, but not the positive, because rates are down and gasoline's down, and there could be some pull forward of demand. So we might end up having better growth, so less stag, and maybe the inflation stuff is more distorting, and so it's not as stagflationary.
Some of your recent calls that turned out to be prescient, bullish calls had to do with inflation not being as bad as people feared. Is that still what you think? Because some of the numbers have at least given a head fake that maybe it's still around, and you throw in tariffs. We just heard what Goldman Sachs say, a 0.5 point higher on the PCE than they thought previously, and 3.5 on the PCE is not going to allow the Fed to relax.
I mean, yeah, it's interesting because Goldman did raise their inflation forecast, but then they're talking about more rate cuts.
I know, which is because of growth concern.
Yes. And I think we'll have a glimpse of what Fed Chair Powell's thinking because he's speaking Friday after the jobs report. And I do think that it remains a more dovish Fed than many expect. I mean, I think that's what was revealed after the March FOMC meeting. And not that I'm saying it's going to necessarily a reversal of markets here, but I think investors are a little too scared. Once we get through this tariff and that agenda around tariffs, markets can look forward to things that could be positive.
So the three whales in a room is going to be the tariffs, Trump policies, and how the economy is actually going to hold up through this turbulent time. So I'm going to break down those three things right now in a no BS way so that you know exactly what's going on in the market so that you can make your own decision on do you buy the dip right here potentially, or is the market going to keep going down? So just by looking at this chart right here, we are Trump tariffs 2.0, and understand that this chart's a little bit laggy. Right now we're towards the end of March, but you can see the similarities. The market goes up, the market goes down on the first wave of Trump tariffs, but then we get a little bit of a relief. It kind of seems like Trump puts in all these tariffs. A few days after they go in, we start getting negotiations, and then maybe the market goes up because tariffs aren't going to pan out to be as bad as what we thought. That is a cycle that's happening right here. So many people are trying so hard to not sell the bottom right here because they read all the negative news articles, all the the FUD out there, all these people freaking out on YouTube and X saying that the market's going to go down another 40, 50% and we're never going to recover. So me personally, I am deploying a little bit of capital right now, but I am by no means betting the house on it. Because of the next couple charts that I'm going to show you, it's going to change your mind about following this chart right here and just buying the dip. And just to build on that chart a little bit, you can see that we're in the extreme fear category right now. And Warren Buffett's #1 quote of all time is to be fearful when other people are greedy and to be greedy when other people are fearful. So right now is the time that we want to be greedy because people are extremely fearful. So this is pretty much the cycle that the stock market actually moves in. So starting off, you have the stealth phase, then you have the awareness phase, mania phase, and blow off phase. Now, most retail investors, most retail traders, they're usually buying in this phase right here where there's peak greed, there's peak delusion. It's like, oh my God, new paradigm, I'm never going to lose money. And then bam, the market goes straight down. Kind of like what's happening right now. The last few years, the market's been pretty much going straight up in a disconnected way from the fundamentals, meaning the earnings did not go up as much as the stock market went up. And that points to valuations are a little bit expensive. And remember, I'm going to show you that chart coming up in a second, but the smart money buys in early, institutional money comes in next, and then a typical public investor comes in and they get totally wiped out. So everybody right now wants to know, where are we at on this chart right here? Now, I'm going to tell you where I think we're at. I'm not saying it's a guarantee, but if you were to ask me where we are at on the chart, I think we're somewhere in this phase right here. I definitely think we had the big run up. I definitely think we had the big blow off top. And I do think that we're somewhere in a fear capitulation phase right here where investors are saying, if the market goes down anymore, I just can't take it anymore. I'm going to sell my stuff. I'm going to go in cash. I'm done in the stock market. That is what most people are going to say right now, especially if we go down even a little bit more and it's going to be max pain down on this level right here. I get it that we could keep going down a little bit more, but you were buying up here when you felt like the market was a good deal. But now that it's down here and it's a little bit cheaper, why are you not wanting to buy? This is where most investors go wrong. Most people buy high and they sell low, but you want to buy low and sell high, of course. So maybe we have this little dip right here. But what if the market runs straight up over to here in the next couple years? You're going to be like, crap, I missed out on that opportunity. And it's just this cycle right here, repeating and repeating and repeating itself. That is how the market goes. When you zoom out and you become a long-term investor and you do long-term stock option trades, this cycle doesn't even matter. Because when you truly understand how to value the market and know what you're getting for what you're paying, you're probably never going to invest in this time period right here, but so many people do. That's the problem right now, is there's so much social media out there. There's so much social media hype. People buy high and they just sell low and they get so destroyed. That is literally the reason why I made this YouTube channel, is because I see so many people buying into stocks that are going straight up. And I say, why did you buy it? And they say, I don't know. It's just going up and I'm making a lot of money. Maybe you bought here and you went to here and you made a little bit of money, but then it goes straight down so fast and you're just carrying that bag all the way down because you feel like, oh, it's going to dip and you're going to go up even more. So you're caught doubling down on this period right here, but then you just get totally vaporized. Your portfolio just blows the heck up. So let's look at the next chart to get a crystal clear picture of what I think the market's going to do. And if you understand this chart, I don't understand how you're going to lose money in the stock market in the long run. This chart is almost guaranteed to make you money if you truly understand it. You will do well. Here we go. So I've went through this chart before with you guys, but we have to do it one more time because something really big did just change on this chart. So if you haven't went through it before, let me just explain it real quick. The lighter line right here corresponds to the S&P 500. This is a 10-year chart right here. And the darker line corresponds to the earnings growth of the companies within the S&P 500. So typically in the long run, the stock market, meaning the S&P 500, will go up the same percentage basis as what the actual earnings of the companies do within it. So over here in 2021 and 2022, you can see the stock market came down, but the earnings were higher than what the actual market did. So this was a time that the market was undervalued. You could see the disconnect right here where the earnings went up, but the market was still a lot higher, which you saw what happened after that. This was a 35% market correction on the NASDAQ. Now you could see up here how we're so disconnected right now from the actual earnings growth that the market wants to fall down to the earnings growth line, and it could even go down lower. So there's this tension and there's this magnetism that's pulling the market down towards the earnings growth line, and this is called reversion to the mean. The mean line of growth, the average growth line of the companies within the S&P 500, is much lower than what the market's actually at right now. So I 100% guarantee you that these two lines will cross again. They cross right here, they cross right here, and they cross right here. So whether the stock market falls or the earnings go up, I guarantee you that these two lines will cross again. I don't know when they're going to cross. Maybe they cross this year, next year, this month, but they will cross again. So understand this. The stock market is still quite a bit of ways above the earnings growth line. The stock market is definitely expensive still, even after the little stock market dip that we had. But understand that even if we go just down to the earnings growth line, this is roughly 10% more the market could go. But look at how much lower the market went than the actual earnings growth line right here. So we could go down to this level right here. You go to the left, that's a 43.92 S&P 500 price, which indicates roughly 15 to 20% farther that we could fall right now. So if your portfolio can't handle a 20 to 25% drop in the S&P 500 this year, you better go change something around. I'm not saying to sell everything and put everything in cash. I'm just saying right now you want to be very, very careful with leverage. You want to be very, very careful with margin because nobody knows what the market's going to do in the short term. When you become a long-term investor, and I'll go back to the chart right here, when you become a long-term investor, you bought right here and it ended up over here. You made a lot of money if you were just patient in the last 10 years. But if you were trying to get cute and timing the market, you would have bought in here maybe and sold right here. You would have got destroyed. So I'm going to end on this, and this is exactly what I'm doing in my $1 million portfolio right now. I buy stocks and ETFs when I feel like they're trading below intrinsic value, companies that I'm okay to hold for the long run with pricing power, with a durable competitive advantage that really dominate their field. And then when I have ultra high conviction in any of those plays right there, I'll buy shares, I'll buy call options, or I'll sell put options, or I'll do a combination of all those things right there. And then when I feel like the market or the stock is super overvalued, I might sell calls or I might buy puts on that because I anticipate those stocks or ETFs to fall in price. So usually I do more trades on the bullish side of things because I'm very bullish on America in the long run, but just short term, I do feel like things are a little bit expensive. Irrelevant of tariffs, irrelevant of what Trump is doing, the market needed to correct lower, and this is healthy. This is a normal part of investing. So if you can't handle it, if you're freaking out, click the link below, do my course. You're not going to freak out in times like this if you know what you're actually doing. But if you don't want to do my course, watch this video right here. It's the 10 ultra critical charts that you have to look at right now in the stock market to really know what's going on. I'll see you guys there.